I used to feel so awful in a trading position, unsure if it's a high probability trade or not, until I looked through hundreds of my journal trades, and that's when it all clicked. All my winning trades have the exact same key confluences. This became the foundation of the model that has gotten me and multiple of my mentees funded and payouts. These key confluences made it easier for me to know exactly at what times to trade, when smart money validates my trade idea, and most importantly, when explosive moves happen. After this simple model, you'll also be able to hear the market scream at you, "Take some money from me!" But chill, you're gonna get that later in the vid. I'll give you an overview of this model, walk you through a real trade example which I've caught, and explain the key confluences. When there's too many variables at play while trading, it can cause confusion and hesitation while executing. Simplicity is the ultimate sophistication. That's why we're going to keep it as simple as possible. Trading in itself is already hard, so no reason to make it harder for ourselves. We need a trending H4 market for this model. In this example right here, just imagine this being the H4 time frame. After we break the previous leg's high, this becomes our new dealing range, this low to this high. In this dealing range, we want to see price retrace to discount, but we're not going to buy too early. We're smarter than that. We're going to wait for a sweep of liquidity with the key confluences indicating to us that smart money is validating our trade idea and that the move is going to be explosive. But Oske, how do we know that the move will be explosive? Chill, you're going to get some. So right here, I'm going to go through it again. Break the previous leg. We have our new dealing range, this low to this high. Retraces while sweeping some form of liquidity. And then we're going to explode. No diddy, that sounds crazy, but we're going to explode, G. So like I said, we need to see smart money validating our trade idea. Many people jump into their trades way too early without smart money tipping its hand to them. This causes them to ruin their equity before price starts even going, man. Then they miss the whole boat. But that ain't us. We're patient and disciplined. That's why we need my favorite entry pattern, the unicorn. This is truly the strongest algorithmic pattern in my opinion, as it is both baiting people for continuations while simultaneously neutralizing early participants. So in simple terms, we're wrecking people and we're also baiting them to trap them at the same time. If we zoom in into this section right here, as you guys can see, after the sweep, we get price displacing down, meaning people are chasing this down move while we are just waiting. We're patiently waiting for the unicorn to happen. We're not entering too early like people right here before the extra sweep. There's a little inverse fair value gap here and people are already entering and then they get swept and then they get mad. Like relax, just wait. Wait for the sweep, baiting people to continue to short. This plays through the previous leg, indicating that we are going up, and I'm trying to see a fair value gap there. Or 2, or 3, or 4, or 5, or 6. I don't care how many. I just want to see a fair value gap there. I want to see displacement. This is truly showing me, we're ready to go. And that's when I'm ready to go. When price is telling me, we are ready to go. Not before, not after. I'm waiting until price tells me, yo, Oskai, let's make some demo money. And I'm like, alright, if you really want to, I'll entry. This little simple trick saved me from so many losses in the beginning of my journey. If someone just told me, just wait for this entry pattern. But nah, I was like a crackhead trying to enter before the move even happens. So I know the things people go through. So why is this going to be an explosive move? Because when we retest this breaker right here, we don't want to come back deeper, because people that were continuing the short from this leg and that probably have their stop loss around here or maybe up here, we don't want to give them a chance to exit their positions at a smaller loss, because they were chasing this down move and were waiting for that little reversal. That's why these moves are so explosive. So now you know the logic behind price. You don't just know the entry, you know why it is explosive. And this is just one of the key confluences that tells me that price is going to be explosive. You'll get the next one in a little bit. Just relax, bro. Just relax. Also, shout out to one of my funded mentees, Font. He's taken the exact same trades as me from one of the models that I taught in the mentorship. If you're also a trader, doesn't matter if you're advanced or struggling, and you're trying to learn a simplified model backed by data with more than 30 weekly reviews to study the trades from, then check the mentorship. These are some quick model requirements that'll help you prevent so many unnecessary losses, and I'm gonna give you all my personal favorite times to trade in. We only use this model in a higher time frame trending environment. We do not use the model after our higher time frame draw on liquidity has been met, because we don't know if it's gonna continue, reverse, retrace, or consolidate. Other than that, I ain't trying to see y'all trade this model before NFP, CPI, or FOMC. If you risk 1% there, you might get slipped, lose 10%, and you're gonna cry. So don't blame it on me. I just told you, don't trade there. And we only execute during the kill zones. Pause the video to read the times. I ain't gonna read them for y'all. Now here we got my favorite times to trade based on my winning trades only. As you guys can see, 2 to 3 a.m. is a sweet spot for London session, and 8 to 9 a.m. is a sweet spot for New York session. I got these entry times based on my personal data. My personal data made me elevate to another level. It made me so confident in my profit taking, my stop loss placement, when to trade, when not to trade. I hold this data to me dearly, so I hope you appreciate that I shared this in the video. And if you want to see more of this data, it's available in my mentorship. As promised, I'm gonna give you all a trade example. This trade has been caught by me. It's one of of the trades that was in the beginning of the video. As you guys can see, I sent out my analysis to the mentorship. I told them EU is acting iffy and it might drop soon. And what happened? It dropped like crazy. You already know how I'm rocking, man. But other than that, I told my mentorship that I'm looking for shorts at the H1 breaker, as you guys can see right here, and longs from discount of the range. What happened? Exactly as I predicted. We came into the H1 breaker, but this was outside my trading hours, so I did not capitalize on it. We came back down, swept the low inside of discount, and then we exploded no diddy. And I'm still finna teach y'all this key confluence of exploding no diddy, so y'all better pay attention. You can clearly see the price is respecting weekly fair value gaps and then attacking liquidity, retracing back into a weekly fair value gap and attacking liquidity. This week right here, I was expecting price to open up, manipulate down, displace up on the weekly candle to attack these highs. On the daily time frame, I saw that price is respecting this daily fair value gap and daily breaker. How I internalized price was that we are accumulating orders inside of the daily fair value gap and daily breaker to then explode up. But I was wrong in my analysis and I still milked the market. That's how beautiful trading is. You can be wrong and you can still make demo money. Then on the H4 time frame, as you guys know, I'm looking for another sweep of liquidity. And I'm going to give you all the sauce of why this move was explosive in my opinion. Because we have swept previous day's low, leaving a SMT with GU and DXY. Once I see SMT at a daily key level in alignment with order flow, I'm going crazy. I'm like, damn, I need to be in this trade. That sounded crazy, but I got to be inside of there because I ain't letting that run without me. That's the key confluence that I wanted to tell y'all. Focus on SMT. I truly don't know why people aren't emphasizing SMT more, but I'm telling y'all, once you see that cracking correlation, it's like, damn, it's hitting like crack. So y'all better pay attention to it. It's such a crazy confluence, trust me. And on the H1 time frame, as you guys can see, it looks almost identical to the H4. We manipulate downwards, sweep the previous day's low. That's when I'm zooming in like a sniper. I'm trying to see that unicorn, you feel me? It's a bit hard to see right here, but this leg comes off a fair value gap and displaces down. So once people see this displacement, what do you think they're thinking? They're like, damn, I missed this whole move. I'm trying to enter, man. I'm trying to enter like a crackhead. So they see this order block and they're shorting there. But we are smarter. We have a higher time frame narrative in the back of our minds. We are looking for longs. This is just a little manipulation for us. Just manipulation for these losers. How are you getting manipulated by candles, bro? Like, relax. Right here, we displace through this leg, retest the breaker block, and then we explode. No diddy. But okay. How do we enter here? Relax, relax. I'm finna tell y'all right now. I love entering on the breaker block for the reasons I stated in the beginning of the video when I taught y'all the unicorn pattern. So go and watch this video again after it's done. But before you go and rewatch the video, I'm gonna give you the key confluences. Because if you watch still here, you're trying to learn and I'm trying to see you win. The market runs on liquidity. So I'm trying to see some people get wrecked before I enter, because I know we're gonna use them as some fuel and get a little explosive move. I use every form of liquidity, but the main ones are session, daily, weekly, and monthly. Next up, we got the SMT, smart money tool / technique, which means divergence between correlated assets. If I see EU sweep previous day's low, but GU does not, my alarm bells go off. I'm like, damn, something going on. I'm trying to see what it is. EU is inversely correlated with DXY. So when EU goes down, DXY has to go up. But when we see that cracking correlation, and I'm finna inverse this chart for y'all of DXY on the right, that's when you can see how in sync it moves with EU. So let me go over it real quick. Previous day's low, EU sweeps it, displaces, and on DXY right here, we have the previous day's high. We do not sweep it, leaving a SMT, and then it explodes. Likewise on GU, this right here is the previous day's low. We do not sweep it and explode up as well. As I said, I'm trying to see that little unicorn. But when that little unicorn is happening on multiple assets at the same time, I'm like, thank you markets. Y'all trying to see me win. But on a real note, you want to see the unicorns happening on the correlated assets, even on the lower time frame. That gives me so much confidence to enter my trades. So I'm going to show y'all real quick with a inverse DXY chart again. EU, high, low, higher high. GU, high, low, higher high. And DXY, high, low, higher high. And it's just a beautiful key confluence that I use. I'm going to give y'all some little more sauce. We can also look for SMT on a unicorn, but this is not mandatory. I ain't trying to see y'all get lost in the sauce on the lower time frames, so don't use this until you master the basics first. I'll go over it real quick. In this example, GU sweeps the previous low, as you guys can see right here, but EU fails to do so, while DXY also fails to do so. That's indicating to me that there's even something going on in the lower time frame, and I'm like, damn, Gotta try and see me win even more, but don't get lost in the sauce using this. The lower time frame are the least of your concerns. That's just a little entry pattern. We want to have a narrative first. So don't take this as like the holy grail or something. Lower time frame unicorn with SMT, let me enter. Nah, G. Enter only on high probability trades in alignment with order flow. Lower time frame unicorns mean nothing unless there is a higher time frame narrative back in it. And it's as simple as that. Rinsing the markets week in, week out with one of my models. If you want to work with me, check the bio.